Hey everyone, it's RS Bell with CRE 101. Thanks so much for tuning in. And typically, I do not talk about religion and politics and yada, 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 but today I'm going to talk about politics. So the impossible has happened. Again, Donald J. Trump, defying all the odds and predictions, he's reclaimed the Oval Office, so it is more likely than not, then he will take a seat, several seats, wherever he wants in the White House. His return to power has reignited debates and discussions across the political spectrum, and his victory in the 2024 presidential election has sent shockwaves through the nation and beyond, leaving many wondering what his second act will hold. Supporters, of course, are elated, believing his leadership will strengthen the economy and restore America's global standing. But critics are concerned about potential divisiveness and policy reversals. Neutral observers are cautiously watching to see how his return will affect various sectors. So we'll see what that looks like. The atmosphere right now is charged with anticipation and speculation, but I'll tell you one thing is certain: the worlds of real estate and finance are bracing for impact. So what impact do you think Trump's return to the presidency will have on the economy and your industry specifically? And so I want to move on to investors. Let's talk about them. So building on the uncertainty of the political landscape, investors and analysts are already making predictions and adjustments in response to the news. Trump's policies during his first term had a profound effect on these sectors, with some praising deregulation and tax cuts, while others criticized increased market volatility. His decisions could significantly shape the economic landscape. Will it be a repeat performance or a radical departure? Only time will tell. Experts and pundits are divided, each offering their own theories and predictions. And some anticipate aggressive economic reforms that could spur growth, while others warn of possible risks to financial stability. The real estate and finance industries, along with the rest of the world, are watching and waiting with bated breath. And every move, every decision will be scrutinized as this new chapter unfolds. So how do you think investors should prepare for the potential changes in policy and market conditions? What do you see happening? I'd love to hear your perspective. Please drop it in the comments. So in regard to tax cuts and the Job Act, his baby, let's kind of transition into that. Trump's signature legislative achievement, the Tax Cuts and Jobs Act of 2017. Let's talk about it. This sweeping legislation aimed to stimulate economic growth and investment, but it really had mixed effects on the real estate industry. Supporters argue that the reduction in the corporate tax rate spurred business investment and job creation, and critics pointed to the cap on state and local tax, those SALT deductions, which they say disproportionately affected homeowners in high tax states, which could potentially lead to declining property values in those areas. So with a second Trump administration on the horizon, speculation is rife about whether he will seek to further revamp the tax code and what it might mean for real estate. Some analysts predict that Trump may push for deeper tax cuts, potentially targeting individual income taxes and capital gains, which could significantly impact investment strategies and market dynamics, potentially fueling demand for luxury real estate. I'm not mad at it. However, others caution that such moves could exacerbate existing inequalities and widen the wealth gap between the affluent and the less fortunate, raising ethical and social concerns. The potential for increased deficits and national debt as a result of large-scale tax cuts could also create economic instability, ultimately harming the real estate market in the long run. So how do you think the potential additional tax cuts might affect the real estate market and, commercial real estate and really just economic equality as a whole? Moving on, let's talk about deregulation and financial stability. So building up on tax policy, let's talk about it. Trump's first term was marked by a deregulatory push against various industries, including finance. The rollback of certain provisions of the Dodd-Frank Wall Street Reform and Consumer Protection Act was particularly noteworthy. Proponents of deregulation argue that it unleashes economic growth and boosts lending by reducing burdens on financial institutions. Critics warn that easing regulations could increase the risk of financial instability that could harm consumer protection. So with Trump back in office, the debate over the appropriate level of financial regulation is likely to reignite. Will he continue to dismantle Dodd-Frank, potentially emboldening financial institutions to take on greater risk? Or might he recognize the need for safeguards to prevent another crisis? These answers to these questions could have major implications for the stability and profitability of the financial sector, as well as ethical considerations regarding consumer protection and economic fairness. So, what balance should be struck between financial deregulation and maintaining economic stability and consumer protections? And what does that look like in your industry? Are you in traditional real estate? Are you in commercial real estate? Are you in finance? Or are you in something else? I'm really curious to understand what your position is and hear your thoughts on that. Shifting focus to domestic investment, throughout his campaign, Trump pledged to invest heavily in infrastructure, which is needed across so many markets. Rebuilding America's crumbling roads, bridges, airports, and other critical infrastructures could be a boon to the construction industry, which is great, creating jobs and boosting demand for materials and equipment. Supporters, they see this as a much-needed investment that could stimulate economic growth. But on the other side, the question is the feasibility and the funding of such plans. Like, where's the money coming from? There are concerns over increasing deficits and national debt. Like, we're already in a struggle. So what does that look like? The details of Trump's infrastructure plan really, at this stage, remain unclear, and it's uncertain whether he will be able to garner enough support in Congress to pass a major infrastructure bill. So the potential for increased deficits could offset some of the economic benefits and potentially lead to long-term financial challenges, which is what we don't need. So do you believe that large-scale infrastructure investment is worth the potential increase in national debt? Why or why not? Let's examine the international stage. The global economy is on edge as nations grapple with the fallout of trade policies. Trump's penchant for protectionist trade measures, including tariffs on goods from China and other countries. So sorry, Temu. I call it Temu. My kids, they always fuss at me about it. It's Temu, whatever. Had far-reaching consequences. Supporters, they argue that these policies protect American industries and jobs. And on the flip side of that, there is the argument that, trade wars, they disrupt supply chains, increase costs for businesses and consumers, and ultimately harm international relations. So with Trump, trudging back into the White House, it's uncertain whether he will continue an aggressive trade agenda or adopt a more conciliatory approach. We don't know. A continuation could further destabilize global trade, while shift toward cooperation could really boost global economic stability. So how do you think protectionist trade policies affect the economy, and what do you think the approach should be moving forward? What should he do? What would benefit the greater good? Fed and these interest rates, and that's our favorite thing to discuss nowadays. It's been very, very interesting these past few years. So connecting global trade to monetary policy, the Federal Reserve plays a crucial role. I sound like AI, but it does. It plays a crucial role in setting interest rates, influencing borrowing costs, and overall economic health. And during his first term, Trump criticized the Fed for raising rates, arguing that it stifled growth. So some say that low interest rates, highlight the benefits for borrowers and economic stimulation, and others, they warn. They're like, hey, keeping rates too low for too long, it leads to inflation and asset bubbles, and we kind of saw what that looked like. So with Trump back in office, the relationship between the White House and the Fed, it could be tense. I don't know. What do you think? Will he try to pressure the Fed to keep interest rates low, or allow it to operate independently? I don't know about that. We'll see. But what do you think are the potential risks and benefits, of a president influencing central bank policies as a whole? Financial markets are known for their sensitivity to political and economic uncertainty. During Trump's first term, unpredictable pronouncements, often delivered via social media, sent shockwaves through the markets, causing crazy volatility. Some say that, those market fluctuations, hey, it's natural. It's a natural response to decisive leadership and necessary change. But others really felt like that volatility created uncertainty, and people don't like uncertainty because that kind of uncertainty can harm investments and economic stability. And everybody wants to have some sense of stability. If they don't have it in their home, they want to feel it in their economy. So, Trump moving back into the White House, investors, they might be bracing for more of the same. The prospect of continued policy uncertainty could keep markets on edge for a little bit. And it seemed like we were kind of trekking in a good direction, but I don't know. What does that look like? How do you manage investments during periods of high market volatility? And what strategies do you find effective? So linking market volatility to currency value, the US dollar fluctuates based on factors like interest rates and investor sentiment. So during Trump's first term, going back to that again, the dollar initially strengthened, but then later it weakened due to trade tensions and increasing deficits. And, that's what I was talking about earlier. We don't want to go back down that rabbit hole. So some think, a strong dollar, we want a strong dollar, and it is reflective of economic strength. And others, they point out, like, hey, look, it makes export more expensive. And a weaker dollar, it can boost exports, but it could also lead to higher import costs and inflation. And you kind of have to carve out what's the best situation, what's the best outlook. And, you got to give a little to get a little, but what does that look like? Honestly, they really have their own set of advantages and disadvantages. So what do you think? Do you think a stronger or weak dollar is better for the economy, and why? Tell me why. Extending from currency value to investment, the United States has long attracted foreign capital seeking safety and high returns. That's what we all want, right? High returns. So Trump's policies, very unique, particularly trade wars and immigration restrictions have raised concerns, among foreign investors. And some think that these policies protect national interests and could lead to long-term gains, but others think, hey, this is, we're barking up the decreased foreign investment tree, and it could hurt economic growth in the long run and make financing deficits more challenging. So the question really does remain whether foreign investment will continue at previous levels or if investors will become more cautious. So how important is foreign investment to the U.S. economy, and what factors influence these investment decisions? So bringing together all of these trends, predicting the long-term impact of a Trump presidency on real estate and finance is challenging. The outcome depends on unpredictable factors like global economic conditions and policy decisions. And businesses that adapt to changing landscapes and capitalize on new opportunities may thrive, but those clinging to the status quo might be left behind. So, there's those ethical and social implications I was talking about earlier. widening that wealth gap, that can really shape the economic and social fabric of our nation. So what strategies can be employed for businesses and individuals to help them navigate, this uncertainty and traverse these unstable waters while still promoting equitable growth? I don't know. Cryptocurrencies have become a significant part of the global financial landscape. During his last term, his administration expressed concerns over digital currency, focusing on risks like fraud and financial instability. And supporters of cryptocurrency advocate for innovation and the potential for financial inclusion. Critics have emphasized the need for regulation to prevent illicit activities. So, with him heading back into the Oval Office, the future of cryptocurrency regulation in the United States is, like everything else I've talked about, uncertain. Stricter regulations could hinder innovation, but might enhance security and consumer protection. So, what balance should be struck between regulating cryptocurrencies and fostering innovation in the fintech sector? I'm going to wrap it all up. And, in conclusion, Donald Trump's return to the White House, it marks the beginning of a new chapter in American history. We're just at this really interesting pivotal point, filled with both challenges and opportunities for real estate, finance, and emerging sectors like cryptocurrency. The road ahead, we don't know what it looks like, and the decisions that will be made in the next 4 years, they're going to have a truly lasting impact. So the ethical and social implications, economic inequality and consumer protection, those things add layers of complexity to the policy landscape. And the widening wealth gap could have a profound effect on social cohesion and economic stability. So as we move forward, tell me, what are your hopes and concerns for the future of the economy and society under this administration? Please share. I'd love to hear your thoughts, your rants, your raves. What is the world thinking about this new dawn, this new era, and this golf swing that we've added back into the White House? So please share in the comments below. Thanks for tuning in and listening to me go on and on a little bit about this awakening that is taking place in our great country. So, will he make America great again? Was it always great? I don't know. We'll see. So, I'll catch you guys next time. Thanks for tuning in. CRE 101. Catch you later. Take care. Bye.